Here's your weekly gold and silver market outlook and what investors should watch in the coming week. Last week, precious metals experienced mixed trading. Gold remained relatively resilient but struggled to extend its rally as higher U.S. Treasury yields and a stronger U.S. dollar limited buying momentum. Investors continued balancing safe haven demand against expectations that the Federal Reserve may keep interest rates elevated for longer if inflation remains sticky. Silver showed much higher volatility than gold. It benefited from strong industrial demand expectations related to renewable energy, electric vehicles, and artificial intelligence infrastructure. However, profit-taking near recent highs caused silver to pull back before the weekend. Despite this correction, institutional investors continue to monitor silver closely because long-term supply growth remains limited, while industrial demand continues to expand. ETF activity remains one of the most important indicators. Gold ETF flows have stabilized after several weeks of inflows, suggesting that long-term investors are still maintaining exposure rather than exiting positions. Silver investment demand also remains healthy, although short-term traders have become more cautious after the recent rally. Looking ahead to next week, several events could determine market direction. U.S. inflation data, Federal Reserve commentary, Treasury yields, and movements in the U.S. dollar will all be closely watched. If inflation comes in softer than expected, markets may increase expectations for future interest rate cuts. That scenario would likely weaken the dollar, lower bond yields, and provide a positive environment for both gold and silver. On the other hand, if economic data remains strong and inflation stays elevated, investors may expect higher interest rates for longer. In that case, both metals could experience additional short-term selling pressure before finding stronger support levels. From a technical perspective, gold continues to trade within a healthy medium-term uptrend despite recent consolidation. Buyers appear willing to accumulate during pullbacks rather than chase prices higher. Silver also maintains a constructive longer-term trend, but its higher volatility means investors should expect larger price swings in both directions. Overall, the medium-term outlook remains cautiously bullish. Central bank gold purchases continue at historically strong levels. Geopolitical uncertainty has not disappeared, and expectations for easier monetary policy later this year continue to support precious metals. While short-term volatility is likely, both gold and silver remain attractive diversification assets for investors seeking protection against economic uncertainty. If next week's inflation data surprises to the downside, precious metals could attempt another breakout. Otherwise, expect a period of consolidation before the next major move.